Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the market site in Times Square, we have Shawn Cruz. He's the Trader Product Business Manager over at TD Ameritrade. We're going to take a look at the trading week ahead, Iran and trade. And Shawn, speaking of trade, something kind of happened in the market over the past 45 minutes.
Yeah, it actually was shaping up to be maybe a halfway decent day, and then we got news that the China trade delegation was going to cut talks short and head home sooner than was expected. And that was actually what was driving us a little bit higher earlier, was optimism that we were going to get this continuation of pretty good news on the trade front. This is something that really kind of turned on a dime here. And the other thing that came out alongside of that this morning, where a lot of people were starting to ask themselves, was, are we actually going to get to a full resolution here? Are we going to get halfway there? The president came out and said he's not interested in getting a partial deal done. He wants a full deal done. So apparently that was not in the offing for this round of talks, and they left early.
Because even while he was saying that, when he was doing the press conference with the Australian Prime Minister, he had said it is all or nothing for the China trade deal. That's when I was on the show with Nicole. As soon as I got off with that, when it's like around 1:15 or so, that's when we saw the market drop. And I guess, like you were saying, the Chinese were not happy with that. All right, let's move along to our first chart here. We're going to look at oil volatility, speaking of what's happening in Iran.
Yeah, so just looking at what we've been seeing out of the price of oil lately with that attack on the Saudi Aramco oil installations, that really popped oil volatility to kind of a little bit of a higher regime. If you look at where we were trending lower here around that 35 level, we popped up, got as high as 50, and now we seem to be in this range closer to 40 where we spike every now and then. So what that means to me is, one, not only should you expect oil to be volatile, especially because we're probably going to have some more headlines around this Iran situation over the coming weeks, which will drive continued volatility. But also, if you're looking at this from a stock standpoint, I would expect this to drive volatility in a lot of these energy sector stocks as well.
All right, let's move along to our last chart. It's a heat map of what stocks and sectors were performing. Again, this was made before we had the move in the market with the Chinese delegation leaving earlier, but all things remain the same. Take the trade rhetoric out of it. What are you looking at here?
So what I was looking at this morning when I kind of I like to look at the heat map in general, just get a good feel for how all the various sectors are performing. And what I noticed here was that you didn't really have any one sector solidly in the green. So I would say the breadth of the positive upside move we had this morning, it wasn't strong across the board. You see some spots of red, some spots where it's kind of muddling around flat. The only place we really had solid upside movement was in the healthcare sector, but everywhere else it seemed kind of like a soft rally this morning. So I don't think it was going to take much to get markets to sell off a little bit. Certainly a breakdown in the U.S.-China trade talks is going to cause a more pronounced move to the downside, because there wasn't much conviction around the rally that we had this morning.
All right, to wrap up for the trading week ahead, you'll be looking at GDP, manufacturing data, of course, a number of Fed speakers on the circuit as well.
And I think one thing that's going to be interesting to look at from the Fed speakers is what they're really focused on. So we've heard a buller come out and talk about we're in a manufacturing recession already. Some of the data we've had lately sort of contradicts that point. We have seen a little bit of a rebound in the surprise index. We are starting to surprise to the upside a little bit. There's some positivity you could take away from that. But I do think the Fed, in terms of where we're seeing weakness, they're focused in on the manufacturing, some of the capital spending type of economic indicators. So those may be something to watch. And then in GDP, if nothing else, we need the consumer to remain strong in this upcoming GDP report, because they've really been carrying the water for the U.S. economy so far.
All right, agreed. Thanks so much, Shawn, for joining us on Trade Talks. And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.